welcome. Today we're going to be talking about the accounting cycle. When you talk about the accounting cycle, we're really talking something that most people refer to as bookkeeping. This isn't really the same thing as accounting, because in bookkeeping what we're going to be doing is focusing on data capture and recording, classification. And this is an important task. It really needs painstaking accuracy. It's the basis for all of our compliance and our reporting and our planning, and it evolves over the life of an enterprise. But if it's not done right, it can really sink the ship. So what we're going to be doing in this accounting cycle is recording the transactions in the books. Now traditionally this was done using paper books, and we had a ledger and a journal and subsidiary detail records. And these kept track of basically the monetary transactions. And you can see here's a sample of a journal. And it had a place to write. We'd have a lot of different journals here, and you can see all of the entries that were made in these journals, these paper journals. And then they were posted to a ledger. And here our ledger was by category, and all of the different transactions posted into one page. So this is what they used to use, along with our adding machine here. Well, nowadays, all of this is done in the computerized database. And we have not only monetary transactions, the dollars and cents, but also non-monetary data. So this is a very important part of what we do. Now here you see an example of what books used to look like. And of course nowadays everything's done on the computer. Well, let's start and take a look at what this bookkeeping process is all about and how it contributes to giving us the kind of management information that we need to make good decisions.